Kia ora, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock with news. Commodity prices are weak today as global factory activity slows, and some banks have run out of places to invest their excess cash holdings. But first, in the US, there were 2 factory PMIs out for June today, and this sector is back to its lowest level since May 2020. The widely watched ISM one was quite downbeat. It contracted again and by more than expected as softness continues, and optimism about the second half of 2023 is sharply weakening. In the internationally benchmarked market factory PMI, the story was similar. In China, again less negative than the official measure, the Caixin PMI for China did not contract in the way the official survey suggested, but it really isn't an expansion either. Factory PMIs in Taiwan and South Korea are contracting too, although not at faster rates than previously in 2023. In Japan, they're like China, neither expanding nor contracting. India is the standout factory hub at present, recording surging demand and clearly benefiting from de-risking strategies away from China. In Singapore, their largest bank, DBS, said that deposits are flowing in much faster than they can invest them, so has had to lay off more than $36 billion to Singapore's central bank. Elsewhere, surplus liquidity is building up in Japan as well. And Australian building permits rose sharply in May, driven by the volatile apartment building sector. And staying in Australia, one of their largest pension funds has slashed the value of its local office property assets by as much as 20%, as commercial property woes hit them as one of Australia's biggest landlords. And later today, the RBA will review its cash rate target, which is presently 4.1%. Markets expect a 25 basis point rise to 4.35%, given they have strong labour markets and housing distortions are featuring again. They also have inflation at 5.6%, which is well higher than they want. Higher interest rates won't help those commercial property valuations. And the US Treasury 10-year yield will start today at 3.86% and up 2 basis points from yesterday. And the price of gold will start today at $1,921 an ounce and little change from yesterday. And oil prices are a little softer at just under $70 a barrel in the US, while the international Brent price is a tad softer too at just on $74.50 a barrel. And the Kiwi dollar starts today at 61.5 US cents and only marginally firmer than this time yesterday. Against the Australian dollar, we're little changed at 92.1 Australian cents, and against the euro, we're similarly little changed at 56.4 euro cents. That means our trade-weighted index is now at 69.9 and fractionally firmer. Get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.